Hello, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. I want to welcome everybody to the Daily FX Walkthrough. We're going to get started in just a moment. What I'm going to do tonight, as always, is walk through the latest technical report by Jamie Setley at DailyFX.com. So let's go ahead and bring up that report and read the synopsis on top. Range conditions persist with the U.S. dollar at the top of its recent range. Trade accordingly. So let's see what Jamie has to say more specifically about the euro-dollar. As expected, the euro-dollar range continues to tighten. A break, likely lower from the range. The triangle is expected next week. The upper end of the triangle line, next week would be this week now. The upper end of the triangle line is in the 129 to 129.50 zone today and Monday, and is resistance in the event of an advance. And also the dollar-yen, larger dollar-yen trend is down, so strength should be sold. So let's go ahead and pull up the charts. There are a lot of charts that I want to get to, starting with the euro-dollar. If you were listening to my report, the last report, I was mentioning that we had a potential inverse head and shoulder pattern, with this being the left shoulder, this being the head, and this being the right shoulder. And I was mentioning, I believe that I posted at 8:20, and this is the 8 to 9 p.m. candle right there. And I mentioned that if prices were able to close back above this line, that we might enter on the long side. Again, it was a low confidence trade idea, but we can see that it did work out. So let's assume that you did enter the trade at that right shoulder. Right now, a good point to exit would be that triangle line that Jamie is speaking about right now. I have that resistance line at about the 130 area. That's what we can look for, but we should keep in mind that the overall trend is down. So if you were able to get an entry on this trade idea, I would exit the trade actually, maybe even now, maybe look for another maybe 30 or 40 pips or so, and then look to exit. But most importantly, keep an eye on Jamie's reports, and he can give you more up-to-date resistance levels. The next chart is the dollar-yen, and I have moved the resistance line. I was using that same resistance line, which was gave us a good gauge of direction for the dollar-yen, but I have moved it because it's been, I was mentioning last time, it had been violated a lot, so I was beginning to lose confidence in it. So here's the new line, and as Jamie was mentioning, he's very bearish on the pair longer term. This is a resistance line that I would be using for the pair. Of course, anything can happen. Doesn't mean that it has to act as resistance, but this is what I would be looking for moving forward, maybe to get an entry somewhere just below that line with a stop just above it. But of course, we should look for the candlestick action that's occurring while prices are testing that line. What we would like to see, what I would like to see ideally, is a nice little candle wick penetrating to the upside, and then have that candle close back beneath the resistance line. Then we can enter on the next candle and place our stop above the candle, above the spike of the candle that does penetrate the resistance line. So that's something that we can look for over the next few hours as prices are rapidly approaching that resistance line. But again, this is a short-term trade idea, so keep the risk tight. And the next chart is the euro pound, as this is what I've been mentioning, to maintain a slight bearish bias against the 81.95 high, which is this candle wick right here. I can change the style so you can see that a little better, and we can see that price has actually made a high. I believe this is 81.92. So again, I would maintain that slight bearish bias against that 81.95 high, and hopefully you were able to get an entry close to that 81.95 high to have very favorable risk-to-reward ratio in the trade. The final chart is the Kiwi dollar, as we have been mentioning. We see a little reversal here. I was mentioning how this could be corrective. Right now, I would say that, as Jamie was mentioning in his report, and this is something, again, certainly I'd recommend keeping an eye on Jamie's reports, because this could prove to be an extended rally, but at the current juncture, I don't see any entry point. I was mentioning the 57.40 area, as Jamie mentioned as well in his reports, so that's what I would be looking at in terms of an entry on the long side. But again, this is something that I just keep on the radar screen. Don't see anything at this moment, but it's something I keep my eye on to see if anything does develop. What we might do, we can actually redraw the support line. If you give me one moment here, I'll go ahead and do that to include that the new low that was made, and we could do that just by connecting the line like that. Let me change the candlestick style so you can see it just a little bit better. And if we do that, that's something that we can look at possibly as a support line moving forward. But again, this is a short-term level. I don't have that much confidence in the line, but it's certainly something that we can use as our first level of potential support in the Kiwi dollar. Again, my name is Matt Russell. I'm an FX Power Course instructor here at FXCM. Thanks for listening.